slowdown for Easter seems to take longer and longer every year. This year I think it was about a month. People seem to slow down for 2 weeks before Easter. We had a week for Easter and then a week after. And only now is the London market really starting to get back into action and get back into the swing of the spring market. The spring market, as usual, is really busy. There's lots and lots going on. We've seen substantially more property in the market, which I'm delighted about. It's really slowed down the dramatic price rises. Prices are still rising, but the dramatic price rises, caused really by lack of stock, have really calmed down. And I see the next 3 months as being very important in the London market. Up until really the market usually slows down for August, I think it's going to be extremely busy. We've got low interest rates, we've got lots of people looking, and we've got more property than we have had for a long time on the market. Still not as much as in 2007, but really you shouldn't compare anything to 2007. It was an anomaly, and I'm certainly not looking back at 2007 as the place to be. 2006 maybe. The real, I suppose, blot on the horizon, if you want to call it that, is the election. No one knows what's going to happen. There are a number of eventualities that will come out of the election, the most frightening of which I think is a hung parliament. A hung parliament terrifies me. It'll mean the economy probably, and certainly the property market, come to not a complete halt, but the uncertainty will be extremely bad for the market in my view, and will put everything on hold for a period of time. Whilst a hung parliament is an obvious fear, I don't see that people have stopped looking at the moment. There seems to be multitudes of buyers and more coming in every day. So much as the RICS have said people are putting their properties on the market to sell prior to the election, maybe they are, but that supply is being picked up by the demand. So I don't feel people are stopping for anything for the election. Quite frankly, we all know what's coming down the line. There's going to be lots of new taxes, but people need to live somewhere, they need to put their money somewhere. The issue at the moment is that with such low interest rates, it's great for property, it's also appalling if you've got money in the bank. So property is coming through again as a proper asset class, and all sorts of wealthy individuals the world over see London as the place to be. I bang on about it the whole time, but London is a very, very special place. It is unique, and one can't compare it to the rest of the UK. London attracts enormous amounts of wealth from all over the world, and certainly this year, and probably for the last 18 months, we have been blessed, in inverted commas, by weaker sterling. This has meant that London is the preeminent city in the world for property, and we've seen it again this year. Vast amounts of foreigners, Italians and Greeks, coming in and buying property in London. The rental return is still 5–6%, and the capital appreciation in the last 18 months has been quite staggering. In many, many parts of London, and probably all the parts of London that Marsh Parsons cover, we've seen prices back up to in excess of their levels of 2007. Now, that might be good, it might be bad, but it is factual, it is what's happening. I don't see interest rates rising for this year and probably the foreseeable future, which means that property will continue to be a place that attracts enormous amounts of money, both for homeowners and for investors. And I don't see this changing in the near or even medium term. I can see in London as a whole that the positivity in the economy has returned and keeps on returning. And therefore I see London property as a great and growing asset class that will continue to do so for the foreseeable future.